Good afternoon. Welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. And we are coming to you live it's the last Midcap Radar for the year 2025. We do start the January series as well. And what a stellar rally on the first day. Nifty comfortably above the 26,150 mark.
That's right. Good afternoon, Sonal. And the good part is, most of the portfolios that have mid-caps, that's doing quite well. The mid-cap index is trading well above the 1.2% mark. So that's something that's very positive. Lot of beaten down names, especially EMS stocks. All of these stocks have recovered quite sharply in the session today. But a lot lined up on the show. So let's start off the top headlines. Market at day's high as on the last trading session of 2025. Mid-caps and small caps outperformed frontline indices in a repeat performance for the second straight day. Metals and PSU banks lead sectoral gains while IT stocks drag marginally.
Privy Specialty Chemicals slips more than 10% after equity worth 1,100 crore rupees changes hands. Promoter group entity likely to have sold stake in the company. We'll await the details in the block deal data.
Zydus Wellness skyrockets on the Motilal Oswal note. A buy rating with a target price of 575 rupees a share based on what the brokerage calls the best risk-reward profile in the industry.
Indian Hotel sells its entire shareholding in Taj GVK Hotels and Resorts. Promoter Shalini Bhupal acquires 25.5% stake for 592 crore rupees. Okay, some stocks which are on our radar now. As Vivek pointed out earlier, mid-caps are surging. It's a 1.1% gain there. Bank Nifty is too supporting the broader the benchmark index. That index is up 1.3%. Metals, that's a one-way rally for metals. We have been talking about it every day, and that continues to be the case today as well. That index is up almost 2%, pushing the Nifty higher as well. But mid-caps and small caps, they continue to be on our radar. And as you pointed out, that space is seeing a stellar rally.
Well, that's right, making the portfolio feel a little better on the last day of the year. Well, two stocks on the radar. The first one, of course, will be Idea. All eyes will be on the outcome of the cabinet meet, whether there is any update on that. Idea, that particular stock is up almost 4%. And along with that, Industars too is in focus. But these stocks and a whole host of other stocks is what Sudarshan has on his radar. This is our special segment with Cap Movers. Sudarshan is at the wall to take us through the mid-caps that are moving around in the session.
So after a few days of range-bound of trade that we have seen in the market over the last few days, finally today it's the day that we are seeing all-round gains, and one segment or one sector that has been in the focus for the last few days, and today also it's in the focus, and there is a news flow. Finally, government has announced safeguard duty, and that will be applicable for next 3 years, and safeguard duty in the first year is 12%, and going forward it will come down a bit, and in the last third year, it will be 11%. And tracking that news, we are seeing a big move in all the steel names. SAIL, you can see up more than 5%. JSPL is up almost 3%. Similar move is seen for Kalyani Steel. Even your top Nifty gainers are also JSW Steel and Tata Steel. Now, amid all-round gains that we are seeing in the market, all the oil and gas names are trading higher with healthy volumes. OMC, HPCL, BPCL, IOC higher in the range of 3 to 5%. Even Oil India and Gujarat Gas are trading with gains in the range of 4 to 6%. EMS companies, the question is, all these companies, are they seeing fresh buying or there is something else? Because today all these companies have seen a sudden up move in the last 1 hour. PG Electroplast up more than 3%. Amba Enterprises up almost 2%. Similar move is seen for Dixon Technologies. And lastly, Keynes Technology also, after being under pressure for the last few days, today this stock is also higher, up almost 2%. But there are certain stocks, there are certain pockets which are under pressure even this strong session. First one is Hindustan Zinc, and there is a reason to it because silver prices have been volatile over the last few days. Today in the early morning trade on the MCX, there was a sharp fall in the silver price. It had fallen as much as 7%, and because of that you are seeing a downtick in Hindustan Zinc. PV Fintech, there is a reason again. Commission charges, IRDAI, that is the insurance regulator, may come out with a draft regulation norm, and because of that this stock is under pressure. And last one is Privy Specialty. Promoter is likely to have sold more than 6% stake worth more than 1,100 crore, and because of that this stock is under pressure as well.
Okay, yes, we've been talking about that stock and discuss it in greater detail as well. But Sudarshan, thank you so much for joining in. That's about all the mid-cap movers that are in focus. Let's now welcome Ruchit Jain from Motilal Oswal Financial Services for a technical check on the markets. Ruchit, good afternoon. Thank you so much for joining in. Well, what are the charts suggesting? The January series has started on a strong note.
Will we see additional gains on this by the last hour of trade? Yeah, hi, very good afternoon, Sonal. Very good afternoon, Vivek. Well, if you look at last 2 months, the last two series, I think markets have seen more of a consolidation on the index front. October end, we were around this 26,000 mark, and still we are around that 26,000 mark only. But no, if you look at this entire consolidation, the good thing is that the index has managed to take support around its 50 DMA on every correction, and markets are not closed below 50 DMA even on a single trading session. So that EMA is now placed around 25,800. So I think till that support is intact, overall biasness remains sideways to positive. And if you look at the sectoral momentum, last few weeks, I think it was only the metals which were witnessing a good up move. But now we can see that participation coming in from banking, NBFCs, OMCs, auto. So up move is getting spread to different sectors now from just one sector. So I think this is a positive sign, and that should lead to further up move in the near term. So we are also advising to trade with a positive bias till 25,800 on the Nifty is intact. I think market should head higher in the near term.
Well, thank you so much, Ruchit, for views as far as the index is concerned. But for the last trading day of 2025, what are your top picks?
So we have a couple of recommendations from the large cap space which are looking good. One is Tata Steel. Overall metal space definitely has done well, but now the steel related stocks have started seeing some good momentum with increasing volumes. Tata Steel has already formed a base around its 200 DMA recently. So at current levels, we recommend to go long here with stop loss below 173 for potential up move towards 200 in the near term. And OMCs definitely seem to be one of the space where we should see some good moves ahead because of the bullish price volume actions which are happening. IOC within the space, we like all three AMCs, but the risk reward ratio on IOC is favorable at current levels. No, considering an HPCL and BPCL has already seen a good move. So at current levels, with a stop loss below 161, short-term traders can go long on IOC for potential up move towards 176.
All right, take that point, Richard. Thank you so much for joining in and wishing you a very happy new year. That's about the market technicals, but we'll slip into a break. When we come back, so many stocks in the broader markets which are moving around. We'll take a look at them.
Welcome back to Midcap Radar. Well, the market strength continues, especially in the broader end of the markets. But one particular stock that's doing quite well is Wockhardt. It's buzzing in trade after a positive development for its drug clinic. Ekta joins in with more details.
Wockhardt is ending the year with what seems to be another positive for its antibiotic under development, Xenic, also known as WCK-5222. The drug has been given accelerated assessment status by the European Medicines Agency or the European regulator, which means that the EMA will review the drug faster than usual. This accelerated assessment status followed a pre-submission meeting that the company had. Now, this development, remember, follows the US FDA, which is the US regulator, accepting Wockhardt's new drug application for Xenic just earlier this month, which was the first ever acceptance of an NDA by an Indian pharmaceutical company. Now, Xenic has already been used in more than 70 patients under compassionate use. Wockhardt has indicated that they were expecting faster approvals after the US FDA nod and expects US FDA approval by mid next year for the drug. Manufacturing, they have indicated, is going to be planned through a European contract manufacturing organization. Now, when it comes to numbers, Wockhardt estimates that the peak sales potential of this drug could be around $1 to $2 billion, with around 40% coming in from the US market itself. The India opportunity, however, could be around 150 crores in terms of peak sales, but they are still to receive approval.
All right, thank you so much for joining us with all those details, Ekta. The other stock on our radar is Bharat Forge, in focus after receiving 1,662 crore rupee contract for supply of CQB carbines to the army. Baba Kalyani, the CMD of the company, tells CNBC-TV18 that they are likely to close FY26 with an order book close to 14,000 crore rupees. Listen to that conversation.
First time Indian designed products and developed products are competing with foreign products and winning. I think that's a very significant milestone that we've been able to achieve. We don't have any external collaborations here. It's all internal. This done right from the raw material to the finished product is all made in our plant. We have set up a special plant for this in Jejuri. It's a plant that has got a capacity to produce about 50,000 to 60,000 weapons per year. But easily, it's a modular plant. It can easily be doubled, tripled based on the requirements that are there. A lot of interest from companies abroad in terms of wanting us to produce weapons for them here. So that's another thing we are beginning to see. And those quantities may be even bigger than the quantities that we are looking at for the Indian Army. We are looking at export orders for artillery guns, which are in process, and hopefully they will get materialized in 26. Currently, we have an order book of almost, I would say, if I take the carbine order into consideration, almost about 10,000 crores. And we hope that by the end of 26, this order book can go up quite dramatically to at least 14,000 crores, something like that.
Well, some positive commentary coming in from Baba Kalyani there. The defense order book currently close to 10,000 crore could rally up to 14,000 crore is what he said. But the other stock on our radar, and that's doing very well today, is Zydus Wellness. It is going up on the back of a positive note from Motilal Oswal. Manglam joins in with more details.
Well, that's correct. So Zydus Wellness, the last day of the year is doing a lot better because Motilal Oswal sees a near 35% upside from previous close on this stock. The stock up nearly double digits, and that's because they believe that, the portfolio that the company has of low sugar products, high protein products, functional nutrition and beverages, on-the-go products are doing extremely well. The company is actually, in leadership in several of these categories, and these are categories which have underlying mega trends in them. And to that, Motilal Oswal believes that the company can actually go ahead and leverage upon this portfolio to scale this business higher. And for all of this, the risk-reward, the market cap versus the performance that the company is likely to do is a lot better as compared to other consumer companies with similar market caps, more so after the acquisitions that the company has made as well. So on a growth basis, Motilal Oswal expects a 14% EBITDA CAGR on organic basis and 36% CAGR on a consolidated basis over the next 3 financial years. And basis all of this, the stock is still, as per them, trading at a 30-35% discount to peers. So if you adjust the fair value higher as well, you come to closer to 575 rupees. And that's what the brokerage believes, and the stock is reflecting that.
The stock is higher by 8.5% as we speak. This stock is doing well on the upside, but the other stock that I am tracking is buzzing on the downside. Privy Specialty Chemicals, that's the stock on our radar. Now remember, there's been a block deal in this one, 38.8 lakh shares, which is basically 10% of equity worth 1,100 crore rupees exchanged hands in the block deal window in the morning. Sources did suggest yesterday that promoter group entity is likely to sell 6.32% stake. There is an option to upsize as well on that one. The promoter entity is Vivira Investment and Trading Private Limited, which will be selling stake. We'll of course get all the details in the block deal data later in the evening. But do remember, this is not the first time that the promoters have sold stake in the company this year itself. Currently, their stake stands at 69.89%, but back in June, they had already sold around 4% stake for 330 crore rupees. This is when their stake stood at 74.05%. The company in itself has seen a lot of change in hands as far as the promoter group is concerned, or the ownership is concerned. In calendar year 17, Fairfax invested around 370 crore rupees in the company for a 51% stake. After that, there was a merger that happened between Privy Specialty and Adi Fine Chem. But because of some differences between the two companies, there was a demerger that took place again. And that is the time after which Fairfax sold the stake back to promoters of around 48.8% stake. And this took the promoter stake to around 74%. So a lot has happened, post which we have seen this gradual stake sale coming in from promoters as well. What does Privy Specialty do? It is an aroma chemical manufacturer which exports around 75 products, and it is also the top pick from Motilal Oswal. Remember, they recently initiated coverage on the stock with a buy rating and a target price of 3,960. They expect the company to deliver CAGR of 27% for revenues, 34% for EBITDA, 46% for adjusted EBITDA for the next 3 financial years, and this will be driven by 3 things. First will be increasing capacity in its core products. Second will be increase total addressable market for the new products that they are entering into. And third, they are working on improving relationship with existing customers for their big products. Now, the company has spoken about capacity expansion. 18,000 metric tons is what they are planning in FY27. This could actually more than double by FY29 in terms of capacity addition. The new products, they are expected to see margins of more than 40%, which is much higher than their current margins. And new products could be around 27% of their total revenues in FY29 versus 6% currently. So a lot of things coming together for this one. Now, remember, SBI large and mid-cap fund holds around 1.6% stake. It'll be interesting to see whether they buy more stake in the block deal today. So that is one data that we'll be tracking. The stock trades at 28 times FY28 EPS, which is somewhere in the middle of the chemical value chain valuations as well. But yes, this is the stock, a big block deal. We'll get the details later in the evening today.
That's right. So post-market hours, once the block deal data is uploaded, we'll see. And most likely it appears also the upside option was something that the promoter family did intend to go ahead and exercise. A 90-day lock-up on further sale of shares. Well, we'll now slip into a short break. We'll get you on the markets and stock-specific action on the other side. Stay tuned.
Welcome back. You're still tuned into Midcap Radar. Well, India's data center capacity is set for a massive surge, projected to expand nearly 10-folds by the end of 2030. But what's driving this explosive growth and who stands to benefit the most? Vinny Motiwala is here to decode India's booming data center sector and the key beneficiaries. Over to you, Vinny.
Right, thanks for that. So India's data center sector has marked 2025 as the breakout year. Capacity expanded from 0.5 gigawatt in 2020 to 1.6 gigawatt in 2025, fueled by 30 times the data traffic rise since 2017. 900 million internet users also came into India and AI usage started increasing. And what was interesting that made OpenAI India market, OpenAI's second largest market. Now, in 2025, what more did we see? We saw mega investments that came in. Reliance Industries unveiled world's largest Jamnagar data center plus 1 gigawatt AI facility with NVIDIA. TCS launched its Hypervault for 1 to 1.2 gigawatt AI-graded capacity over the period of 5 years. OpenAI committed to 1 gigawatt amid DPDP Act mandates. Now, the total announcement that came in for 2025 hit $63 billion. $43 billion was ex of Reliance. So, yes, $20 billion approximately was Reliance. Now, with hyperscalers leasing 97.9 megawatt in first half itself, 48% increase over there is what we're seeing on a year-on-year basis. Occupancy at 97%. Mumbai dominating 50% share as well. Now, India added a record 30 gigawatt renewables in FY24-25, making it third globally, enabled by cheap solar power, supportive government as well. For renewables versus other countries, how do we stand for AI data centers, which needs 5 to 6 times more energy? Now, power demand from data centers globally is estimated to grow at a CAGR of 17% till 2030. For India, it's expected at 33%. And with the US and EU power queues that are increasing there, execution timelines are increasing, there is permitting delays across the globe because of all these issues. The focus now shifts to India. India's data center capacity is projected to increase rapidly in the coming years, and obviously because of the factors I mentioned. Now, it's interesting to note that when data centers are created, 45% of it is capex cost, is non-IT equipments capex. Whether you look at it like a cooling system, electricals, construction, etc., which accounts to most of the costs. IT costs come in at 55%. And India has no dearth of players in terms for equipment play, whether you look at an L&T for EPC, Cummins for backup power, there is infrastructure that is required, there are cooling systems that is required, so we have Voltas for that. Wiring, Polycab could benefit from that as well. So this will boost what? L&T, Cummins, Voltas, a dearth of companies that we have that will benefit from this as well. Now, in US, when you look at it, utilities present in the right region or even in companies which have access to electricity have seen a bigger success in the US versus other companies. In India, currently, most data centers are present, located in Mumbai region. 50% capacity is in the Mumbai region. Why? This is due to network access that is there via undersea cables. Further, when you look at it and break down India versus US, unlike US, India is one nation, one grid. Although transmission is becoming a big bottleneck similar to US, but India's data center capacity is maybe set to rise almost 5 times to 8 gigawatts by 2030. And this is according to Jefferies. Setting up 1 megawatt of data center in India requires a capex of $4 to $5 million, and hence setting up incremental data center capacity of 6.4 gigawatt by 2030 will need a capex of around $30 billion. Should create many opportunities for real estate players, electrical power systems, fit-out players, cooling systems, and network infrastructure players as well, which are among the top beneficiaries for the data center boom. And Indian telecom players, EPC players, power players, IT players, all these are set to benefit going forward with this data center boom.
Well, thank you so much, Winnie, for joining us and giving us all the things to look forward to, especially as far as the data center boom is concerned as we head into 2026. And as you can see on the bottom of your screen, there are flashes that indicate that the cabinet has likely approved an AGR relief package for Vodafone Idea. A very important development as far as Vodafone Idea is concerned. The stock near the day's highest point, and on the back of that, Indus Stars too has spiked higher. But with that, it's all the time we have on this edition of Midcap Radar. Your stocks when we return.